You're looking at a daily chart of the Nasdaq. Welcome to my daily review. You can see that it had pulled back after a nice run from March 13th to June 15th. It pulled back almost down to its 21 in the last couple of sessions, has reestablished itself and traded higher. Now is above its moving averages, which is always a good thing. I believe it's like 1% above its 1.9% above the 21 and 0.6% above the 10. So you can see it's in a power trend, and the moving averages are stacked and trending in the right directions. And this is a special time to be in the market, and it looks pretty positive, and pullback should be embraced. I don't know if this one is completely done, but we'll just take it one day at a time. But the Nasdaq definitely looks positive and is the leading index. I wanted to go through some stocks, do a little something different today. I do want to go through the home builders because we got some of the leading stocks, and this is one of the leading groups here, and they keep making new highs. This is Builder First Source. Nothing to do but let it run, until it runs its course and bends at the end, right? Don't fight the Fed and don't fight the trend. The trend is your friend. This is DR Horton, DHI. Once again, the buy point was way back here, and it's just you got to let it run. You got to let these you got to let your winners run, and the home builders are certainly leading stocks and leading group here, and they all pretty much look the same. This is a Pulte, once again. Taylor Morrison. It's another one that just looks pretty much the same, just trending along its moving averages. But anyway, I wanted to get Meritage is definitely one that we had on our watch list. Last week broke out of this consolidation. Now it's doing the same like the other ones here, traded up to about 140 today, made a new high. So the home builder group is definitely a strong group. The retail group is hit and miss, mostly miss, but there are some stocks doing well. This is another top stock, leading stock. Celsius gave you that buy point at 122, pulled back, returned to the scene of the crime here at 122. If you didn't get it the first time, it gave you a second swing of the bat here, and now it's just trending higher. And there's nothing to do with these folks. Just go golfing or fishing or hiking or take a walk and just let them work. You got to let them work for you. It's been proven over many, many studies and many years that the way to, make big money in the market is to buy winners and sit tight. It's the sitting that is the hard part, because we want to watch and we want to tinker and we want to add and subtract. But and that's fine, but just know that the big money is made holding long over long terms and not day trading all the time. This is ELF, another retail stock that's just, even a first grader knows that, it had this base here and has not had a base since, and it's returned to its 10-week line just a few times here in the last year. But like I say, even a first grader would know that, the lower left to upper right, there's nothing to do here but just allow this thing to work for you. They're a fundamental story, taking market share, tremendous growth, sales and earnings growth. I listened to the CFO, I don't know, last week, and just talking about their business model, and it's going to be pretty tough competition here in the with the slowing economy, just with their price points and their products. So I expect more quality quarters from Elf Beauty. Deckers is another one that just continues to make new highs. You can't fight the trend. I like Crocs and I like Skechers and I like ON, but Deckers is the winner here, the clear winner. And then Nike reports tomorrow might have an effect on this stock. In fact, I'm pretty sure it will, but this continues to make new highs every day. So Deckers is definitely a leading stock. The software group, Palo Alto Networks, is the king. And once again, broke out of this base. You just got to let them run now. It's not. There you see the consolidation on the weekly, and then just trading higher. And if you want to own a security software stock, Palo Alto's the one to own. If you didn't get that one, Fortinet is looking good to me. Just finally caught up with this old high from back in December of 2021. So it's been about 18 months, and it just catching up right here. It's right at that old high. So I would like to see, I expect this thing to break above that 74.35 level. So if you miss Palo Alto, maybe, you can get on a, Fortinet. I always like owning the leaders. So Spotify is another one, leading stock from a leading group. I mean, there's nothing to do here, but just, take a hike, and go fish, go golf, and allow spot to work for you. Mondo Bongo DB. This one gapped up on earnings, formed a little shelf pattern, traded back to the 10, and today made a new high. Once again, I mean, this type of action tells us that investors are not selling at this level, and they're going to have to pay up and buy more. And if they want, because they don't establish their positions all at once, it takes time over weeks and months. They're going to come back and take another bite of this. The big sharks are. And so all retail folks need to do is just hold on and wait for those big whales to come in and buy and move this thing higher. I did talk about leading stocks and leading groups. SMCI is the top stock in the top group, and this thing broke above a downtrend line today. I think this is an important day for SMCI today, breaking this downtrend line. Now, I know people have said this is a head and shoulder pattern, and it's a climax top, and this thing's going to, crash and burn, and maybe it will, and head back to this old gap here. But to me, this is the high tight flag pattern, and you can go both ways, which makes this stock extremely interesting. But for me, I'm going to stay in it. You can see it went from 100 to 270. Now it's pulled back a little bit, but I'm always kind of thinking the positive, and stocks are always going to go up. So that's my fault. But yeah, so it could go either way. But to me, it's a high tide flag pattern. I think it's going to go higher. I think it's going to beat Tesla to 300. That's just me. And I made a bet with a Tesla fanatic that would be. Here's Tesla. Speaking of Tesla, another top stock in one of the top groups. It's up a lot this year. It broke out of this base here at 207, ran higher. Now it's pulled back to the 21. The last couple sessions has moved higher. I thought it would come back and fill this gap here at 235.23, but it didn't. And stock's going to do what it wants to do. And once again, this is a leading stock in a leading group, and just kind of leave it alone and let it work. NVDA, another leading stock from a leading group. It's up. It's been a four-bagger since October, right? And it gapped up here on earnings, pulled back to the 10. Traded higher, pulled back to the 21. I know people want to say that this is a top. This, I don't know, people just want to this is topping pattern. I don't know. I kind of doubt it. When in a bull market, in a market in an uptrend, stronger stocks tend to go higher than people expect them to. And I know they talk about valuation. It's over $1 trillion and it's top, but my experience tells me this is going to go higher and a lot higher. And there's nothing to do there but just watch it go higher. Meta is another one. The internet content group is just one of the this is the strongest stock in one of the strongest groups. And you could see, I mean, like I said, this just like a second grader knows it, stock going lower left to upper right, just leave it alone and let it work for you. And I think sometimes we have a hard time doing that. Because we want to tinker all the time, but that's the theme for the day. Let them work. If you had a Secretariat, you got to ride Secretariat. I know I'm dating myself, but let those winners run. And if you're riding a horse like Secretariat, you got to let them go to the finish line. And we never give up.